Hi, and welcome to the Market Alert for Thursday, the 4th of May 2023. So the Fed raised rates by 0.25%, and the net effect of that is stock and bonds yield tumble on hawkish pause, gain gold as crude oil collapses. Markets for risk assets too complacent. You'll see more about that in a moment. Post-Powell bank selling sees stock close lower. Fed set for June pause. That's not true either, because in his press conference he said there was no pause. So that's inaccurate. Fed hiked rates by 25 basis points but laid out the groundwork for a pause, while Powell pushed back on rate cuts. Again, I just reiterate what I said, that he didn't say that in the press conference that followed. But, of course, the market will use this word, pause, to actually move the markets back to the upside if they can. And then overnight, so here we go again, troubled California bank Pac West craters 60% on report it is seeking buyers or to raise capital. And that is simply because there are so many banks out there, well, all the banks actually, that have bonds and other interest rate sensitive instruments that they bought at lower rates back in 2020. And with rates continuing to rise, the devaluation of these assets is falling off a cliff. And hence why so many are in trouble and going to continue to be in trouble until they stop raising rates. So you can expect to see a lot more with regards to the banking crisis going forward. But I suspect as soon as they get rid of a few, like they did last time with SVB, and now we've seen First Republic Bank taken over by JP Morgan, that they will be bailed out by the Fed, the taxpayer ultimately, as we've seen before, and then it'll be business as usual. And speaking of business as usual, let's have a look at the Dow. But actually, just before we do that, let's just have a quick look at today's news. And again, more interest rates today from European markets. ECB to raise rates by 0.25% as well there. And we've got unemployment claims and ECB press conference. We're going to get a rate hike from the UK tomorrow. Let's have a look. No, because it would be a Thursday if we were going to get it, and today is Thursday. It's that Monday, isn't it, when the markets close and the bank holiday throws you out? No, so nothing from the UK. We've got non-farm employment change tomorrow, the big one another big one for the week there. So watch out for that one tomorrow. So let's have a look at the market's reaction, kick off with the Dow, work our way through to the metals as we normally do. So kicking off with the Dow, we can see we were down again yesterday. There's a bit of selling there, but we've got some divergence. The market's starting to find a bit of support, and you can see there that we're already moving up on the overnight, back above the 50 EMA in the daily chart. We need to get through all of these if we're any joy to get to the upside, but note also that at 50 and 62%, we've got a couple of averages there, 5 bar and a 50 EMA. In the 30-minute charts, well, everything was fine. The market just trading water in a 200-point range, and then we just cratered to the downside once Powell announced his rate increase there of 1/4 point. And overnight, though, as I say, that word pause is enough to bring the market back. Oh, well, that's fine. This is just a temporary thing, so we can bring the market back now. So don't be surprised if the market continues to the upside towards yesterday's high when we kick off. And if not, and reality kicks in and the California bank Westpac does go down, then you will see a test of the close and the lows. It depends on the fundamentals driving today, but no further banking issues. The market will be free to move back to the upside. In the German DAX, barely a move yesterday, as you can see there, and already up on the overnight, heading towards yesterday's high in the daily chart. Getting through those averages as well. We'll just look at the 5-bar moving average, which ties in with the 50% retracement. In the 30-minute chart, you'll see yesterday we opened, shot down to the previous day's close. We came straight off this, and then we tried to hold at the DP and the cluster of averages, which we did. We had an 89% retracement, and then we continued on up with the market in the afternoon before we had the news at 7 p.m. from the US, where we saw prices then move lower. So overnight, prices have made significant ground for the German DAX, and you can see there we're above 62%. We're also above the 200 MA in the 30-minute. We've only got the 78.89, and then we're back to the high and heading back towards 16,000. We've got 15,900 just above this high here. Like I said, always think about the markets in two directions, both up and down. That's the pause side. If the pause narrative has its way, and if not, and we see more banking issues, then these are the moves to the downside, with the low at 15,678, which will need to be kept intact. And you can see they've done this overnight already. They've bought off this once already, keeping that market moving to the upside there. 5-minute chart, you can see there nicely moving up. This is the carnage of yesterday. As you will see, during the announcement, a lot of mess there, up and down, as they waited for Powell to make his statement. They were hoping he was going to say this will be the last rate increase, but he didn't. And there you can see the morning session as well. We had the sell-off down to the close, the cluster of volume, and then off we went to the upside. And overnight, the market making a nice smooth move to the upside there. And like I say, in the 30-minute chart, beautiful to see there. So at the moment, the market is moving quite nicely to the upside, but that doesn't mean to say it will continue to do that. Once we get to the open, it could be a case that they're bringing the market up on the electronic session to sell into it as soon as the market opens as well, which is what they did during yesterday, which you'll see there. So the market brought up, sold into, get rid of the sellers, move the market up. And in the S&P, we can see we came down to the 89% retracement as the market bounced off this last night and continues to move back up on the overnight as well. Notice a 50% retracement. We've got a couple of averages there, adding further resistance to the daily move. In the 30-minute chart, very quiet. 2:30, we got a bit of action down to the close, the market coming off this. And then obviously the sell-off overnight as well. The low being picked up and the market coming back above the DP at the moment, but finding a bit of resistance there at the 4,100 level for the S&P. Meanwhile, in the FTSE 100, a bit of a move to the downside, finding support at 62% with demand there. The fibs back from there, projected up to the high, show to the right there with the numbers. You've got resistance at both the 50 and also the 78 there, double resistance with those averages. And the 30-minute chart of the FTSE sideways yesterday, and then the sell-off where the market has found support and is now moving back to the upside. Needs to stay above the DP in order to move higher. It's got the 50 EMA in the 30-minute chart there, but again the high and all of the pivots etc across all time frames, the high is back up at 7819 for yesterday, and then also the low, more or less equidistant at the moment to either. Quick look at the currencies and their reaction. The GBP JPY down yesterday, as can be seen there. It was down already mid-morning, then the market rallied, found resistance at the close, the 200 MA with supply overbought, and then we see the market coming back down again, test of the low overnight of the market, trying to get back above the DP, but struggling at the moment. In the pound, continuing to move to the highs. Let's just have a look, see where we are on this scale. 125.90. We're already back to yesterday's high, so continuing to move higher as the dollar remains weak. You can see yesterday's high there, and we're just starting to get to it. Not much of a sell-off in the pound, buying back in and then bringing it back up 50 points overnight there. In the dollar index, I've got a line drawn in here, so you can see it's important that we remain above that 101. What's it saying? 101.65. If that's taken out, then as I've said before, we're likely to see a sell-off in the dollar. So keep an eye on this one as well. And then finally, in the metals, let's have a quick look. And you can see there silver moving back up over the last couple of days with some supply though. Back to 89 overnight already. However, this market is seriously undervalued. I mean, we're back at sort of $26, as I've said before, 1979, $50 an ounce, 2011, $50 an ounce, thereabouts, and it's still not back to the all-time highs. You see they're moving up, and overnight also at the high. But when you compare this to gold, let's have a look at the monthly charts. We're now back to the all-time highs, making a new one yesterday at 2078, and yet the price of silver is still 40% cheaper than it was in 79 and 2011. It's just insane. The only thing on the planet that is cheaper than it was 40 years ago, it's just, or anything else that's on the planet, everything else has gone up, doubled in price, except the price of silver is 60% cheaper. It is insane, but there's nothing I can do about it. I remain very, very bullish on it, and once the lid is taken off it and the manipulation stops, then it will be a different ball game. So you can see yesterday in gold, but they've hammered it back down because, say, the central banks are still accumulating gold at the fastest pace since 2010. And there's your look inside for the gold market last night when the Fed's announcement. You see it came back and filled the gap as well. Needs to get back above the DP there. And finally, in the gold-silver ratio, despite the fact silver not making new all-time highs, it is actually accelerating to the upside faster than gold, which it will do because obviously it's a lot cheaper. So percentage move-wise, it's going to be the case. So 79.34 is where we are on the gold-silver ratio at the moment. Okay, that will do it for this one. Let's see if Lagarde's going to increase rates today by 1/4% as well. It's going to be an interesting day. It'll also be interesting to see what the market does when it opens at 8 for the cash and also 7 a.m. for the futures, to see if the market's got that momentum and is going to actually interpret the pause as a trigger to continue to move the market to the upside. Okay, that's it for this one. As ever, thanks for watching. See you in the next.